Earnings seasons officially kicks off tomorrow with PepsiCo being the first to go out, followed by Delta and the financials on Friday. I want to talk to Taylor about this earnings season. Are we going to see companies talk about recession? Are they going to talk about inflation? Are they going to talk about the consumers being stretched? I think the stock market might be priced for perfection. Are we going to get growing earnings or not? Taylor, what's going on, man?
Yeah, it's all good questions, and I think that the market is priced for perfection. I think that's a fair assessment. The market is priced in the next 12 months for us to grow earnings at 15%. To
Hmm.
put some context on it, and that's above trend historically. So that is saying that listen, we're gonna kind of continue to chug along here, and even with us being pricing in future earnings at 15%, we're still priced at 22 times price to earnings ratio. And I know this is all nerd terms, but essentially, listen, the denominator is earnings, and the earnings forecasted in the future are really strong. If the earnings don't come in quite as strong, that denominator then shrinks and you have a higher price to earnings multiple. And right now, the price to earnings multiple, even with the grand expectations of 15% earnings growth, is in the top 5 percentile most expensive stocks have been throughout history. So it's not to say, listen, things are priced well.
Some might say richly priced, but it's good. This earnings season is going to be interesting because, again, it really kicks off the banks. I'm looking at the banks, the financials. And again, it's not the big six, it's that whole next tier
Yep.
because we still have commercial real estate blowing up left, right, and center. I'm reading more and more articles about buildings that are worth 300 going for 100. Those losses have to show up somewhere.
Yep.
And, you know, I'm going to be looking at reserves for bad debt. I'm going to be looking at people who use their reserves,
Yeah.
right?
Yeah.
Also look at net interest margin. Obviously, rates are no longer going up; they're going down. That will usually have some compression on earnings.
Yep.
What are you looking for in the banks?
Yeah, I think the banks are always interesting just to get that broad stroke of what's the health of the economy. There's one area that you can look at that has exposure to literally everything, and that's
Right.
the banks, right? And one of the most stressed areas in the market they are overexposed to, and that's real estate, specifically the commercial space. It will be interesting because the folks that we utilize from a broader standpoint, investing in the commercial real estate space, who have a massive war chest of both exposure and analysts studying that space, they think that there's re-racking lower in prices going to continuously perpetuate moving forward here in real estate. Cap rates are just really low at current prices where things are marked and historically low. And so if you go from a 6 cap and you need to get to a 9 cap, that comes with re-racking of prices lower. And that's their expectation moving forward. So I think that it'll be very interesting to watch real estate. I also think it'll be very interesting to watch travel and leisure. Travel and
Okay.
leisure has been the bellwether of what people have continued to want as we've come out of the lockdowns of COVID, and it's been persistent. You've continuously seen planes in the TSA saying that, hey, we're doing record numbers, record numbers, record numbers, record numbers. It'll be interesting to see if that continues as we go into the winter months and just seeing again how strapped is the consumer, if they're strapped, etc.
Yeah. Definitely looking for the consumer after financials because again, is it the travel and leisure? Is it rest? Because I think travel and leisure, then there's restaurants, right?
Mhm.
Which is the next thing, right? If you're going to cut back where you would cut back, and then there's, the staples. If the consumer is as stretched as a lot of people say, you can't charge forever, right? You
Correct.
eventually get to your credit limit. So it'll be
Correct.
really interesting to get travel. Now, when you look at travel, are you thinking airlines like Delta, United, American? Are you thinking cruise lines? You thinking hotels? Where are you going to look?
Airlines predominantly because airlines when you look at cruise lines, which became epicenter of focus with COVID, that is like specifically vacation, right? But I want to see more broad, like the airlines are going to
Oh,
show you
okay.
business travel as well, right? So
Yeah.
that's super important to start to see there. So that'll give you a more of a combination of, okay, are people traveling for vacation and are people traveling for business, which is obviously indicative of corporate,
Yeah.
corporations being flush and allowing people to travel.
Yeah. The other thing I'll be looking at is high end discretionary, like Lululemon,
Totally.
RH, Tesla, maybe. Right. It's just What is the, the top 20%? Are they still spending loosey goosey? Are they getting nervous, concerned? Are they pulling back? What do you think about that
Yeah.
high end consumer?
Well, it'll be interesting to watch, and I was going to go there if you didn't, so I'm glad you brought that up because I'm looking at that as well. What you had earlier this year was staples have a massive rally versus discretionary. So your Walmarts of the world, where people are gonna go, they have to go somewhere to buy food, and so
Yep.
your WalMarts catch a huge bid, whereas your Nike, Starbucks are maybe not great examples, but they've got awful on the other side. So
Yeah.
more of the discretionary trade though has not worked out as well as the staples trade through a better part of this year. And so it'll be interesting to see if that flips. Walmart is famous for coming out last quarter and saying we have had more people that make over $100,000 shopping here
I
than
saw
we
that.
have. I don't know if it was ever or whatever. They're just saying that people are trading down to be buying at Walmart. So it'll be interesting to watch that. The consumer is a very hard one to discount right now. There have been
Yeah.
so many moving narratives of unemployment was picking up and jobs growth was slowing, and then we get these two recent prints that kind of show the other way. One of the most interesting things of the recent print, and I don't need to go down a rabbit hole here, was that we revised up in the rearview mirror. We haven't
Yeah.
revised up in the rearview mirror ever.
Quite quite a while. Yeah.
It's
Yeah.
been forever. Yeah.
Yeah. The
So
other the other revision that was positive, remember, was the savings rate. I think that was 2 weeks ago.
yeah,
Right? It gotten somewhere in the twos. It's like, don't go here. That's bad. Blah, blah, blah. It got revised to just shy of 5.
yeah.
It's like, oh, consumers have more cash than we thought.
I
The
think what's going
death of the
on,
consumer is,
and
is over exaggerated.
you tell me if I'm an idiot thinking about this. I I think, and you're seeing this kind of like socially in the world too, where you're getting, or in the United States, where you're getting this pretty significant divide, and it continues to kind of broaden out, it seems. And I think on one side, what you have is saving rate increasing. And I think that's because the K-shaped economy where the good continue to do really, really well, and that inflates all of these broader numbers. And then the lower end just is continuing to struggle with not the fact that inflation continues to press on, but it's just the fact that we've seen this magnitude of movement and price hike over the past 2 years where things are now 25% more expensive. And I think that bottom end is getting squeezed and is continuing to do so.
Yeah, I think it's even more simpler than that. I think it boils down to, are you an asset owner or an asset renter?
Totally. Totally.
Inflation's a feature, not a bug. All these things I say all the time. I really do think it comes down to, are you an asset owner or an asset renter? And
Well,
if
the
you're a
people in the top
renter,
end of the K shape are the owners. Yeah.
yeah, exactly. It's pretty wild. I guess the other thing we got to talk about is gold. Gold's been ripping higher. Peter Schiff is dancing in the sun. He's got some love on his side. But
Yeah.
yeah, let's talk about gold being that hedge. Is that just a fear trade, inflation? What do you think?
It's interesting. Gold just continues to push on to higher highs, higher all-time highs. And
Mhm.
I think that you're seeing just it's the microcosm of the uncertainty that's going on in the world right now, where you have, okay, is inflation an issue? I don't know. And if inflation's an issue, that's a non-fiat currency, and that's something that's tangible to hold on the other side. Are we headed into a recession? Some earlier indications in the market, led us in that thought. That's a big win there. You have things going on in the Middle East. You have things going on in the Far East. You have China, who consistently says they're going to take Taiwan, which is going under the radar right now again. All of those things are just broader pressures that say, hey, I want some protection in my portfolio, and protection in my portfolio is coming in the form of gold.
Yeah, love that. Anything else you're watching as we get into earnings season?
No, I think it'll be very, very interesting to see what profit margins do continuing. I think that that's the other area that you just got to pay attention to say, hey, listen, costs have consistently moved up. Are they still passing things through to the consumer?
Like it, man. Where can people find you?
Yeah, find us on Instagram and on TikTok. We're at Life Goal Investments.
Awesome. Thank you.
Appreciate you.